Yes, hi everyone. It's always not that pleasant to get a session right after lunch. But seeing that we have a fair amount of crowd in the room today. Um, so, I have given questions to the panelists, but I'll try to keep it a little more fluid with how we're trying to run. I think the topic for today is FPO and PACs, success stories, models, and roadmaps. I think these two last mile institutions have played a very critical role given that India is a land of smallholder farmers and aggregation helps bring scale and, say, at least commercialization of certain either mechanization or technology that we're looking to drive. Um, we have a lot of panelists on the table today, and if each of you could firstly introduce yourselves to the audience and maybe in a minute or so just talk about how your institution, your regional office, or your company is supporting these last mile institutions. That could be an FPO, that could be a PAX, that could be an OFPO, or that could also be a dairy collective.
Hi, yeah, Jesus. Hi, very good afternoon to everyone. I'm Dinesh Kumar, General Manager from Andhra Pradesh State Cooperative Bank. So, as a state cooperative bank, we are the apex level institution in the Federation of Primary Agricultural Cooperative Societies at the village level and district cooperative central banks at district level. So, to your question of what we are doing to PACs, we are actually, PACs are the owners of our organization, ultimate owners of our organization. So, we are being owned by them, and whatever the service we do is majorly towards PACs. So, ours is basically a refinance model. Whatever we get from NABARD and NCDC or any other organization, we try to pull up the funds and we try to cater to the financial needs of primary agriculture cooperative societies through DCCVs. And in addition to that, being an Apex bank, we give training support, any other non-fund related support for the primary agriculture cooperative societies. As part of that, we have established PAC development cells at each district to support all the PACs. So this is a brief support being extended by our bank, and thank you.
Hello, good evening, everybody. I am Rashmi Darad, Chief General Manager, NABARD, Maharashtra Regional Office. I have come from Pune. Maharashtra, as in the last session also, we were discussing that Maharashtra and Gujarat, forerunners in the cooperative movement. We look after like 21,000 PACs in our state, and 12,000 PACs have gone into PACs computerization this year itself. We also have a very large number of FPOs in the state, largest in the country, again, another 15,000 FPOs in the state. And we are running this FPO accelerator program to take FPOs from level of business at this point of time to maybe at least 1x or 2x more with Syngenta Foundation. Mr. Vikram Borade is also here. So with this brief introduction, I think I will just pass up the mic.
Good evening, everyone. I'm Raghavan Venkatesan, founder and CEO of a startup called DGV. We are a very specialized startup which focuses on dairy farmer and its access to BFSI. So we act as a conduit between BFSI and the dairy ecosystem. So a dairy fintech, a dairy insurtech, and a dairy marketplace. And thanks.
Hi everyone, I am Vikram Borade representing Syngenta Foundation India. We run multiple flagship programs which are focused on improving the smallholder farmer income. A key program is agri-entrepreneurships, which is a mini FPO model where an agri-entrepreneur provide the one-stop solutions to 150 to 200 farmers. We have created 25,000 agri-entrepreneurs across 14 states in India, and in the other program we also work for the business acceleration of FPO with NABARD and climate smart agricultural village program with the NABARD. That's it. Thank you.
Awesome. I think now let's get a little spicy with our questions. So Vikram, why don't we start with you? I think you've been working with so many agri entrepreneurs. Let's translate that to an FPO. if people in the audience today were to help set up an FPO today, what are those building blocks that they must get right from day one? Because I think now there has been a push on creating a large number of FPOs, but foundationally, what are those critical building blocks needed to actually make these sustain longer?
Yeah. So, with the learning of our agri entrepreneurship program, as I mentioned earlier, that we consider it as a mini FPO.
Correct.
The three factors primarily will help in breaking that building blocks. One is the farmer trust. The FPO being a social enterprise, it always looks towards achieving the farmer trust by providing the quality advisory services and input services. And then the second thing is a proactive problem solving attitude. It is the local social enterprise who well into the shoes of the farmer and understand their problem statement and try to proactively provide solutions for them. And then strong business orientations, like they understand the gaps and opportunity and try to provide the solutions to the farmers to improve on their income level. So these three traits, I believe, are important for even FPOs.
No. So I think what you're saying is very important, right? You are talking about finding the person in the village who can anchor the FPO and deliver these three.
Yeah.
How do you find the right agri entrepreneur? How do you find the right CEO? How do you find the right head?
Yeah, so primarily we do a thorough screening process where we do the psychometric test, written test, and the interview. And over and above, we also do the home visit to the agri entrepreneur, because largely the entrepreneurship decisions are also been impressed by the family.
What are the signs you look for?
First science is obviously he should have the blend of entrepreneurship in him. If he doesn't have a blend of entrepreneurship, then it's difficult. And then commitment towards working in a rural area. That is something is very important, because large number of rural youth also now are aspiring to move towards urban centers.
Correct.
For getting their livelihood. So commitment towards working in a rural area for the farmer is an important sign. Thank you.
Amazing. And ma'am, I'd like to come to you, ma'am. Ma'am, you were driving an FPO accelerator program in Maharashtra. I think what were your key learnings on what needs to be fixed and what are those success models that we can actually scale? Within the FPO accelerator program, how do you actually accelerate them? I think you've done a lot of work on identifying. You also have a partnership, but what are those building blocks that today were missing that you were looking to plug?
So in Maharashtra, we have a large number of FPOs, as you know, and there is a scheme of SMART, which is working in Maharashtra. And this is a state subsidized scheme where 60% of a subsidy is given to an FPO for infrastructure creation for processing. So what happens is that many of the FPOs had already taken this support, and it clearly showed that these were FPOs like they were at least 3 years old and they wanted to go forward, but then didn't seem to have a very clear roadmap. And as you know, we chose 40 FPOs who had actually availed some benefit or sanction under the SMART project. And we thought that how can we now accelerate these people? So the first thing that we realized is that we need to have a baseline survey and try to understand what are the gaps and in the requirement over there, and also how you can have a very granular business plan.
Correct.
Because it's basically a vision that has to be translated into a granular business plan only to move forward. Otherwise that movement is not there, and then you can do a course correction later on. So that was one aspect that we really emphasized. Then there was another focus from our side was to have at least each FPO should have at least 2 or 3 business ideas or income streams coming from 2 or 3 different kinds of businesses, apart from the fact that they had some infrastructure created for processing, that when it would be completed and if they could do the capacity utilization of that infrastructure, that was a secondary. But the challenge is to accelerate the business of this FPO within the next 12 to 15 months. And so for that, we had to do what we need to do. So cannot wait for the infrastructure to
Correct.
come up. So that when it comes up, it comes up. But you need to have 2-3 income streams before that.
Correct.
So those were worked out into the business plan. That was very important. The third thing that we focused was on training.
Yeah.
Rather, it was the first thing, but I would still put it at number 3 because when we went along, we realized that training is very, very need-based.
Yeah.
And although we did a very FPO specific planning, the training requirements, though they were the best kind of training that, in the country that is possible now, that is from Bankers Institute of Rural Development, BIRD, and also Syngenta Foundation, because they have this great experience in entrepreneurship development. Even so, we realized that there were many FPOs who wanted, something different.
Correct, ma'am.
So then, because they were not really entry-level FPOs, so that was one learning over there. We did focus. Then after that, Syngenta and team were doing a mentoring, one-to-one mentoring.
Correct.
Then finally, I think that was more beneficial. The fifth thing that we focused was on credit linkage, which is again very important. So NAP Kisan has played a very important role. Apart from that, Syngenta Foundation has also been trying to bring in funds from private banks and other banks. So these were some of the learnings, and I think I would say that planning is key to everything. And then going into secondary businesses and diversification.
Awesome. So I think we have an interesting weaving of key points, right? I think the first point was about identifying the right person and looking at non-traditional signs on how to identify whether he will stay there, whether he has the entrepreneurial zest, and whether he will drive. I think the second is layering a program over for them, which is across multiple elements and not super cool and super wacky, but very grounded on what problems they face. Raghavan, I'd like to shift to you next. When we talk about new age stuff like digital and access to BFSI, access to finance, access to other instruments, A, what is limiting the access today? And B, what are you doing to help an FPO with an unstable board not getting bank access finance get it?
So I'll not say unstable board. Some of them have actually surprised me.
Correct.
A classic case would be the dairy FPOs.
Yeah.
There are about 25 milk producer companies under NDDB, which have grown from the FPO format, and actually they're giving competition to the state milk federations in their state, the private sector as well. So FPO story is a success.
Yeah.
It's just about the governance around it, and probably the CEO and the one down championing it, top down approach. But from a BFSI perspective, there's a lot what has happened. I mean, all of us are aware of India Stack, all the railroads which the Aadhaar and NPCI together created, and multitude of business opportunities have now come around that. And one such case is what I specialize in the dairy ecosystem, where we are connecting the dairy farmer who could be in an FPO format like a milk producer company. And what we did was we persuaded the banks to think differently. So typically, and I am an ex-banker as well, but typically if you go and tell a bank, let's do dairy finance, they will say, oh, cattle finance, we have been doing it for ages. What's so new about it? Okay. So suppose we have to finance one buffalo. One buffalo is equal to one unit equal to 60,000. One cow is equal to one unit equal to 50,000. And that's how they typically think of when it comes to farmer dairy financing. Now take the same banker and say, okay, I want to buy a flat in some posh locality, and say, suppose it's in Bandra in Bombay or some locality. They will say market link pricing. 85% of the flat cost will be financed by the bank. That thinking we have got in the banks, in the dairy sector, to say that if a farmer wants to buy a high quality animal, a high quality buffalo, murra, or a high quality cow like a gir, then you have to finance 85% of the actual market value. So those kind of things we have built in from a BFSI perspective, the access to that finance, how without running pillar to post, how a farmer without giving the land as a collateral, but look at the cash flow of the milk pouring. He's daily coming and pouring 10 liters of milk. That is cash flow. That digital footprint we have leveraged as the cash flow and underwrite the loans along with the bank. Now, this technology, what we have developed, is what is being used in the RBI ULI Unified Lending Interface.
Yeah.
And today, nearly 100% of all the loans on ULI for dairy are powered by DGV. So we are working very closely with NABARD and hopefully with Sarathy as well, to get this technology to the cooperative banking world as well.
And I'd also like to ask you a follow-up question. We see when you look at dairy and you look at agri, on the agri, we have large cooperatives that have been set up on the input side. But on the market linkage side, you don't see as someone as big as an Amul. Why?
So that's a very big why.
Yeah.
And the success of the input lies with the marketing side. If you look, even I'll give you another example. Gujarat is probably the only milk federation with district unions which goes in a very aggressive way to other states to even procure milk. In fact, a lot of milk also comes from other states, right? And in Maharashtra and many other states, Madhya Pradesh and all. Now, they have that hunger to go, because the plant is of 1,000 whatever liters. And what is the basic raw material? The milk security. Now, if you are not able to fully utilize your plant capacity, it is underutilized. So I'm just giving examples of how things in an ecosystem get nurtured. But I think the next 5 years are extremely golden. Every farmer's digital footprint is getting created. Every farmer is realizing that they have to link their Aadhaar to PAN. Every farmer is also understanding that if I don't repay the loan, my next loan is not coming. Because every bank, including cooperative bank, will be giving data to the credit bureau. And eventually, every farmer has to come into the right credit culture.
Correct.
So all this is happening.
Got it. All right. So I'd like to move to you, Dinesh. And I think we've had a lot of focus on FPOs, etc. But let's now shift to packs. Now, when we talk about accelerating packs, I think there is this large push intended towards diversifying their business operations, moving to a non-credit linked source of revenue. Within your state, what are some of the models that you have seen? What are some of the activities packs are picking up, which is beyond their general, say, finance linked activities? And also, what are those 2-3 unlocks that you as a rural cooperative bank have instituted to help them do that? Be that something digital, be that something financial, be that in terms of capacity building. And what are some of the things that other say regional offices as well as stakeholders can take back if they were to help packs diversify?
Yeah. Before answering that question, let me link up this FPOs concept with the packs.
Okay.
So, see, as an Apex banker, cooperative Apex banker in the rural cooperative banking system, what I want to say is the packs are actually matured FPOs, because whatever we have discussed now, the packs are already doing that, and coming right from picking up a particular, correct person to run that organization and credit linkage.
Yeah.
Every point we have already experienced, and we're actually in the other side of the this problems actually.
Yeah.
If you take this picking up a right person, already there is an established system how to pick up a right person for running these packs. And even if you take this, there is an election procedure to elect a capable person to lead that society. And even for an FPO to be successful, the minimum membership should be at least more than 1,000.
Correct.
So now we are handling packs which are having nearly 7,000, 8,000 members. So if you take our state, we have 2,000 packs which are having nearly 24 lakh membership, of which already credit linkage has been given through packs to 13 lakh members. So here we have credit linkage. They're already doing input business. Maybe Syngenta kind of big companies are also trying to partner with packs, which are at village level, because the amount of trust packs have garnered from the farmers, member farmers,
Correct.
is more than a Syngenta. Maybe not to say the company, more than the company's goodwill in that particular area. So packs are already into that business and they're already matured. Coming to your point, business diversification. See, a lot of discussion is being going on now and happened earlier also. And recently, one of the Niti Ayog discussion, I was a member. In that discussion, there were PAC secretaries, PAC presidents. The ultimate conclusion which we arrived at is, see, diversification is required, but not beyond agriculture. So diversification should be done within the agriculture spectrum. Maybe that is within the input linkage side or output
To
linkage
cater to
side.
the members.
Yes. Now, see, Ministry of Cooperation is also coming up with nearly 54 initiatives, like establishing input credit system, soil testing system, and custom hiring centers, and even training centers, and even some new kind of initiatives like common service center and Janaushadhi Kendras, petrol pumps. So, in our state also, nearly 400 to 500 packs are doing different kind of activities. But the conclusion which we arrived is better we diversify the packs business within the spectrum of agriculture. That will make the pack successful.
Okay.
And coming to the support which we are extending in front of digital and other spectrum. See, now Ministry of Cooperation and NABARD came up with PACS computation concept.
Correct.
So in that concept, we as a bank took over the system integrator role, and we have done all the cleansing. See, KYC mapping, while onboarding a member into a pack, we have done eKYC done, so that this James Bond will not enter into our system. So that kind of cleaning we have done at the time of entry itself, and we have equipped our packs with the state-of-the-art technology. And with that technology, at state level, we are having a visibility of what is happening in the packs. So at multiple levels, we are trying to monitor the packs and guide the packs based on the data insights. So this kind
Can
of
you give a few examples for how are you using the PACS computerization data to help the PACS drive its business better?
So, for example, at state level, we devise some products for our DCCVs and packs. So, a single, generally packs are established at rural level with the autonomy at rural level, because they will take decisions based on their members' requirement.
Correct.
So, from state level, we try to push some products.
Yeah.
So, earlier we used to do based on generic opinion and the credit flow in the entire system, banking system. But now what we are doing is we're trying to get insights from the pack level data. In which district, in which area, which product will go.
Got it.
And maybe CC loans may go in some area.
Correct.
Term loans may go in some area. Like that, we're trying to analyze the data from the e-packs, packs computerization, and trying to provide specific solutions to that particular pack.
Understood.
Even the mixture of this membership also.
Correct.
We're analyzing that. Community based and land holding based, different kind of inputs we are getting.
Got it. No, I think this is also a very important point that you raised, which is making sure that systems get digital, and then you're using that digital system to drive efficiency for that institution, which will help drive adoption also in the long run. Ma'am, I would like to now shift to you a little bit, ma'am. Ma'am, in the same realm of digital frontier technology and now there's a big push on driving innovation and technology within rural. What are some of the initiatives in Maharashtra that we are driving? I think some are some smart village centers that we're setting up. Some are digitization of FPOs. So can you just tell the audience about some of the key things that we're doing in Maharashtra on either digital frontier tech or rural innovation?
At the PACS level?
At the PACS or the FPO level, ma'am.
Okay. So, for us, the numbers are key in Maharashtra. So, of the 63,000 packs that are being digitized in the country, computerized in the country, 12,000 packs are in Maharashtra. Very happy to state that all the 12,000 packs almost have been digitized completely with a gap of 10 or 15.
Yes, ma'am.
It's a huge task. Because This also required the support of the DCCBs, the Maharashtra State Cooperative Bank, the RCS, the DDRs, the auditors at the state district level. So that we have done, and they're also doing some transactions on daily basis. The biggest advantage that is being seen, the first advantage,
Correct.
because now the cropping season has started. They've just started completing the data entry. It's just completed about a month back. Actual transactions on that will start now. Maybe some may have done in the Kharif, in the Rabi season. But other than that, the first benefit that we saw was the cleansing of the data. And it was so difficult. Some of the packs were there which didn't have any data at all. And some written in old registers and all those kind of things. So this was a great data cleansing exercise, and also knowing the farmers and their land records. So in that sense, a lot of transparency was brought about for the entire, for the corporation department also, and for the bank itself. 2-3 DCCBs, what they have done is once they realized the benefit of this, they actually started incentivizing the secretaries to start, doing the data entry on a daily basis. Because you have to realize that with 21,000 packs in the state, we have only 6,000 or 7,000 secretaries. And very few helpers and, assistants are there. So who will do the data entry? You need that young crowd to do it. And this is an aging population of secretaries. So now another thing that is being thought about is how to bring in youth into this whole activity.
Correct.
And the cooperative banks are actually taking some initiatives to, engage youths for this. This is also happening. Maybe at a later stage, we might see some more development in this with the concept of Bharat Banker. And you should ask that question to again Syngenta afterwards. That once this concept comes in, it is a 10-day training program where youth would be trained in BFSI. And these can become either BCs or BFs, and this is for the entire country actually. This is a program being run by Vamnicom and by SFI, Syngenta Foundation, and probably it's just launched NIA, and it will be operational soon. Once that comes up, maybe Bharat Banker concept. So once that comes in, then we need to have those kind of people who are engaged even at the PAX level. In FPOs, in the SMART project that we are, which Government of Maharashtra is doing, they have a component for adopting digital tools, disruptive agriculture technologies that some of them have adopted it, some of them have not. But what is important to note that those FPOs which have actually gone ahead have collaborations with fintechs and agritechs to provide them the other services and also the marketing linkages. So in that sense, they are also connected to technology, and then you cannot stay away from technology at this point of level, at this level. So whether it is the PACs or the FPOs.
No, that's very interesting, ma'am. I think you've spoken about this Bharat banking, which I will come to. But also for this audience, I think we have a lot of startups over here. We have a lot of people from development finance institutions. We also have last mile rural innovators. At the end of this session, what I will do is I would want to go around the table, and you should put one big idea out there for people to build. Someone might be coming here thinking of what next to pick up. So we'll go around the table, and everyone should put out one idea. But it is just so that it just helps the ecosystem a little bit. But we'll come back to that. That Bharat Bank sparked that thought, ma'am. I'd come to Bharat in a bit, but Raghavan, where would you say that in the entire dairy, and let me call it finance, infratech landscape, where is there a gap for someone to plug in and become as integral a player to the entire financial system as you? Is it on the production side? Is it on the linkage side? On other, say, systemic enablers?
I would say that the white spaces are there in all the, both on the supply side as well as the demand side. It is for the entity or individual to choose rightly. Let me explain it with a few examples. Even on the supply side.
And just one thing, in those examples, let's put some ideas out there.
I'm just thinking, what idea should I leak out? you know, uh, businesses or ideas can be built around, are best built around what is already solved. And let me explain this. I was part of NPCI's inception team and we had launched IMPS. Of course, now everybody says IMPS is a great success, but version 1 was not, because we came up with an idea of MMID, mobile identifier, which meant that we are introducing one more layer, one more token, or one more variable for a customer to think and remember. The same time, Aadhaar started. Now, Government of India having the vision and the budget to propagate Aadhaar, even they were trying to create a new variable in the ecosystem. So we quickly realized as NPCI that if we were to ask the customer, give your MMID, how to create an MMID and then do a transaction, it is going to be very Herculean task and we don't have the cash burn capacity to go and educate every Indian. So what we said, okay, NEFT is batch mode. We will make IMPS real time. Same account number, same IFSC. Why I gave this example was, now there are various railroads created in India, account aggregator, UPI, and many others. You have to ride on what has already got created and then see the problem or the white space and then cater to it. If you try to create everything from a foundation, you will have to do too much of heavy lifting, and depending upon your capital and not just capital, I mean, entities like Walmart and Flipkart may have the capital, but then the energy and the focus all have to come together in equal measure to make it a success. So NPCI is a great example of success in India because they methodically followed each of the products, having, even at that time, about 15 years back, we had a business development manager for each product who will go into the bank, educate the banker, not as an IT project, but to explain the business case on it so that the banker can understand, okay, I will make fee income, I will make interest income, I will do this. That is when the business side of the bank gets excited, and that is when the IT side is able to get the traction. So one has to identify, like account aggregator, what I can build around it, and so the possibilities are endless.
Got it. Got it. And I think just taking that thought forward, I think Bharat Bank is a new take on the BC network, if I'm not wrong, right? So, why are you looking to start that? Two, what variant of an extension is it to something that already exists? And C, what is the incentive mechanism that you're putting in place to make sure that it, succeeds and scales?
Yeah, so first of all, Bharat Banker is not an extension of a BC thing. Basically, Bharat Banker is an initiative led by the Vamnicom in association with National Insurance Academy and Syngenta Foundation as a field implementation partner. It aims to addresses the BFSI skill gap for the 70,000 new packs, credit packs proposed under the 2 lakhs pack scheme. And it's basically to provide the BFSI skill training and real world exposures of cooperative banking through internship in the cooperative bank. The program has just completed the accreditations process and it is formally to be launched, but we are all set with the completion of TOT of the faculties across all the states and the curriculum and the certification things already done. But yeah, this initiative tries to bridge the BFSI skill gap, which is a dire requirement, or you can say to provide the skilled manpower to the packs, just like the skill CEO is required for the successful running of FPO, the governance issue. So we are trying to bridge that governance issue of the packs from the day one, rather than post creation of the new packs. That's it about the Bharat.
Okay, very interesting. Very interesting. So I think today we spoke about a range of topics across FPOs and packs, what's needed to make them succeed, what are some foundational elements in place, and what are some of the gaps that exist. Why don't we go around the room and our esteemed panelists here, why don't you ask them any other questions that you would have on this topic or something that's, interesting about what they mentioned. And if you don't have a question, I could myself ask. Yes, sir.
That there were certain FPU debate. He get out upon an upper all the way. What could be is something you FPU I want to put it active of pronoun and every expo.
No, I think let me rephrase that, sir. What is the kind of support that the government or NABARD is giving to help set them up? Is that your question? Correct.
So that was a scheme of 10,000 starting 10,000 FPOs. It was a central sector scheme. And we are not, as NABARD, not promoting any more FPOs under that scheme. But promotion of FPOs is anyway, it is a community-centric word. It is process-oriented and it is community mobilization. About of the 15,000 FPOs which are there in Maharashtra, you'll be surprised to know that only 2,125 have actually been promoted by any institution. Some 496 or 406 coming from MACP, that is Maharashtra Agribusiness Competitiveness Program. That was one MSCP was a government of Maharashtra program. There was a 496 which we have promoted, another 1,000. So FPOs actually, once there is a felt need to come together and for two to three things, mainly for marketing and for aggregation of inputs and strength, I think they are coming together on their own. But if you wish to promote any FPO in a certain this, you can certainly go ahead. But from NABARD, we do not now offer support under this.
The last thing which I would like to specifically highlight here is the NABARD Accelerator, FPO Accelerator program aims to identify the methodology on how the existing FPO can grow up in their businesses from where they are. The critical gap which we identified by working with the 50 FPO is that the FPOs do achieve their milestone as long as they are supported through the CBBO and POPI system, that is 3-year to 5-year system. But however, as you know, this is the first generation enterprise created by the smallholder farmer. Having a 3 to 5 year support is not sufficient, because whenever they do diversification from the one activity to second and third and fourth, which is required for their sustainability and growth in the future, there is a need for having a real-time mentoring on different areas of activity they want to take up. So one idea which you want us to dwell upon or to throw to the audience is that after the CBBO or POPI support is over, there is no any such ecosystem available for the FPOs where they can reach out for pay-for-use services. Suppose any FPO want to now explore or list their product to the export market, only the specific export-related mentoring, this kind of pay-for-use system is not available.
So why don't you also talk about some 4 to 5 examples of these pay-per-use services that you're talking about, which are needed?
Yeah. So, for example, largely the mindset for the FPO that have been evolved is like FPOs are made for the post-harvest aggregation and market linkages. So we are impressing on FPO that FPO, if want to become sustainable, they need to be into 2 to 3 multiple value chain, because unless they do multiple activity, the engagement with the farmer will not be throughout the year, as well as the membership drive will not be sufficiently effectful. So those mindset change have been done, and if the FPO has to adopt the new business activity, this type of real-time mentoring or the technology adoption, like suppose somebody FPO want to adopt the drone as a service in their area. See, this is a low-hanging business activity. We have proved it in our FPO accelerator model. The FPO which has done 1,000 acres of spray, they get 100 rupees per acre as an incentive from the drone spraying company. So 1,000 into 100, it is a clear-cut 10 lakh rupees income for the FPO only by providing the resources of their farmers on the ground. So these are type of new initiative they want to take. There is no mentoring or guiding ecosystem available. So what that could be one of the outcome when we write the final document on the FPO executive program submitting to the NABARD. But that is one area where the new startup can work on, and even the NABARD consultancy services and other agencies like Syngenta Foundation can create some ecosystem which can provide this FPO pay for use service model. Thank you.
Awesome. So we have one idea out there, one idea out there. I'll wait. I think we have another question in the crowd. Yeah. Yes. This is good news. We're getting more questions from the audience. Can you pass the mic to ma'am? In the meantime, I think, sir, why don't you ask your question?
Actually, I have two suggestions and one question in the
Okay.
So with regard to a pack, there is something a pack must do, and there is also something which a pack can do. My suggestion on what a pack must do is, I think every pack has packets of.
Okay.
As ma'am was saying, there is a need for youngsters to come into packs, and in order for them to come into packs, we have to pay them salaries, right? So every pack should become self-sustained. In order for that to happen, whether or not a pack can do businesses on its own and generate revenues out of it, it has to use its existing
Assets.
assets, and it has to look into rental businesses for sure. In rural areas, why can't we have convention halls? Why can't we have shopping malls? Why can't we have other smaller spaces which people can use and use all that?
We're saying service-based mode. Yeah, okay.
I think that is something which we have to definitely look at. And what a pack can do is, a pack can definitely be a pioneer in the society. As Dinesh was saying, a pack is something which people around that area are going to believe in, right? So as I was going through the exhibit, so to say something, I'm a DCCD chairman in Andhra Pradesh, and I'm the chairman. Obviously, I'm also a chairman of a pack.
Okay.
So I saw a small startup about soil test.
Okay.
And they are talking about how they can generate reports of every farm, right? So if it don't, the company goes and speaks to some farmers, definitely they are not going to adapt it. But as a 2,200 crore DCCD, I can invest in 2 lakhs buying that machine for my specific pack. Just assign one guy or two guys.
Yeah.
Go around and generate those reports and maybe give it to every farmer. With those 2 lakhs, we can do a sum.
Yeah.
So we can bring out services like that into this low-cost products, right? We can definitely show what we can do.
If I may just ask one question back on that. What's stopping you from doing that?
I'm gonna do.
Okay.
I have a pack development set.
Yeah.
I had recruited youngsters into the team.
Yeah.
Their job is to go around my 94 packs and see which product can fit there.
So your suggestion is diversification should be towards service-related businesses.
Yeah. And I'll close with one question to Dinesh and Rashmi ma'am. So you are saying that Andhra Pradesh as well as Maharashtra have now been computerized in terms of pack operations. So if you are given the ultimate powers, what are you going to do to bring out the products that have happened in the past?
I think we can take the second question as well and then answer that question. Yeah?
Package burning at like Apram Panap Pata, Litik at Didit Panap Pata, and what you have rightly said, sir, like there are so many opportunity open for the right and deep around 86 FPO which we have like promoted number provoker FPO and we support for around 3 years there and what you said post 3 years what is their pay and almost what I have observed is all of them have died almost because they don't have any handcode because they get any credit. Even I tried to activate all the balances. At least you give 5 lakhs of 50 to stand them with agree and put business. Something they will start and then they will start their business. At least they will start moving. But without collateral, no one is ready to, give their money to this FPO. So I wanted help into this because I come to revise certain FPOs and trying my level best when
Yeah, I got your point and I will answer. Yeah.
me that most of our about of FPOs are registered under NEET Act and so many category divisions. Yeah, suppose their line is so file is written that data they have be you will be penalized and all those things. So half of them can collapse because of that. So now I want solutions for these things, but I'm really struggling
Yeah,
hard to revise them.
we have. We have.
First thing you have to do is take Sir's phone number right after this.
No. I quickly answer that. We have a quick solution for that. In the same thing happened in the Maharashtra also. Incidentally, these packs are more than 5 year or 10 year vintage. Okay, the packs which has done 10 years of business still struggle for a working capital. So what we taught them ideally is to how to find out alternate working capital solutions. I'm specifically use word alternate because the normal cash credit limit requires certain criteria to be fulfilled. So what are those alternate working capital? Warehouse receipt finance, pay to buy now, pay later, or bill to ship to, or then there are purchase order discounting or supply order financing.
Sir, if I may, Vikram, sir, I think ma'am also wants to know who to go to.
Yeah, that's what I'm saying. So I'm telling you,
Take it. They are not totally packed. You're talking about that. I'm talking
I'm talking about FPO. I'm talking about FPO.
here, they are registered companies.
I agree.
They are part of societies.
I agree.
And that's why they are struggle a lot. And ultimately, what I saw, earlier they had a outlet sort of thing where they used to sell these inputs or whatever. Ultimately, that banner has gone to the one of the secretaries home and that is packed into his room, and he says, "This is now what is left with BL as an FPO. Ma'am, this is our FPO."
Yeah, but that's what I'm saying. We have helped them to take the warehouse receipt loan. We have helped them to take the bill to ship to loans. We have helped them to take the purchases. See, if they are into the input, if they have a tie-up with a good company, they can definitely get the purchase order discounting or bill discounting facility. If they are into some warehousing or some having some go downs, they can definitely get into the warehousing finance loan. And many of such alternate working capital solutions are available in the market. The only challenge is to create an awareness about that. To create an awareness about that, and then there are smart ways to take that. This, I may not officially tell here, but if the FPOs are not in position to take, the directors can take in individual names, can support the FPOs in seasonal working capital requirement by infusing the debt into the FPOs by taking the loans through the bank. So those things are practically done in Maharashtra also, and we are able to revive some of the FPOs with this kind of alternate working capital solution. And this is known to the banker. Where you are LDM, you may also be knowing which are the alternate working capital solution, and then also dwell upon the low-hanging business activity. As I said, don't think about doing some big transactions and setting up big infrastructures to with the FPOs, because in Maharashtra the same thing has happened. Those FPOs have set up a secondary processing or primary processing with the investment of 3 crore, 5 crore rupees. Their share capital is exhausted in the margin and they are struggling for a working capital now, or even struggling for repaying the term loan installments because they don't have surplus money with them. So start with the low-hanging business activity which can earn them a good revenue, grow a bit, and then invest into the capital infrastructure, which is a sustainable mode of growing. Thank you.
And if ma'am, we can move to the other question of how do you deal with anomalies when there is a large scale, data migration effort that has taken place.
Right. I'll first like to just then add to what Vikramji said regarding the FPOs. So, so this not in Smart. What happened? For the infrastructure, they not only put their share capital into it. Some of them are not even able to complete their project because now they do not have any more margin money left, and due to cost escalation. So they are struggling to complete it. So why this has happened? This has happened because there was okay, there is a subsidy available, let's go and just grab it. And you make a business plan and you said, but then it was not a well thought of business plan. So that is one of the things which I particularly feel is very, very important, and it should happen at the nascent stage when the FPO is coming up. And also, I think that member engagement is very, very important. We have, in fact, emphasized that in our FPO accelerator program. There are only few members in the FPO who are active, and then most of them are inactive and not bothered. So that is very important, because from there comes that democratic nature, basically. Coming to this point, which very interesting point that the gentleman made from AP is that is something that a PAX should do and something that is good to do. So a PAX has to, by nature and by design, have to provide farm credit, that is crop loan. And that is its basic duty. They will do that. Apart from that, now with the Ministry of Cooperation having expanded its the activities that can be taken up by the PACs, there is, in fact, I think, no end to what kind of activities that can be taken. Maybe I differ from you a bit when you initially said that they should just remain in more towards the agriculture. That's a good point also, that you should build on that, and agriculture related issues should be taken up first by the PACs. But in Maharashtra, as he was very rightly pointing out, the successful PACs which are there and who have actually diversified in non-agriculture areas. So, for example, there is this Sakur PAC which is in Ahilyanagar, and they are into multiple businesses. They have got a custom hiring center, they have got one hardware store, they have got some shops which they have given on rent. Apart from that, they have a common service center, and they have huge numbers also, about 2,000. Sorry, this is not this thing. So they have about, if I'm not mistaken, around 2,500 members in the PACs. Average membership in Maharashtra per PACs is around 600, 700, 300, 350 are borrowing members. The huge PACs, they are old. So they have grown over time, and there is a one PACs who is even having a cloth store, selling clothes and this thing, PDS and all. So then there is this Nair Pinglai which is in Amravati, and they are into warehouse creation. So they had a warehouse, and they were one of the first PACs to go into pledge financing. So there are these examples, but we need to understand that there also it is process oriented, and that is a vision of one person and the leadership of the PACs, which has managed to keep the membership active. That is why community engagement, I feel, is very important, whether it is member engagement, whether it is a FPO or whether it is a PACs. Unless the members are not active, things will not happen, and there needs to be a continued leadership with vision, which translate into a business plan. Second question that sir asked was that what do you do with frauds under this thing? See, frauds in the cooperative sector is not, technology will bring transparency and unravel the frauds, at least in the initial stage when you go into digitization. But frauds generally, they are internal, they are in collusion, and there is another system to look after the frauds. So they have to, the PACs, the DCCBs, there is a system of internal audits, internal checks, which are not really happening. So frauds can be taken care of that way. If you're talking about cyber frauds, it's a totally different area. And that which Sakar Sarthi is there, and the solutions have been given, that when it gets connected to the CBS, when this ERP system of the PACs computerization, when it gets connected to the CBS, it will have the safety net that is available to the DCCB. At this point of time, there are various aspects that are seen by the DCCB, either through suspicious transaction reports and software which they have, or they can become member of the Cyber Security Operations Center. Like in Maharashtra, we have Maharashtra State Cooperative Bank, which is running a Cyber Security Operations Center, and then they can become a member of that. DCCBs can. So there are many ways, but frauds in the packs, that is related to another internal audit which has to take place by the DCCB. And again, if the members are active, then frauds will be unraveled faster. This is what I feel. Thank you.
Okay. Mahesh sir, you had a question, sir? Oh, why not, sir?
It's on FPO. I would like to share few thoughts about FPOs because having worked in NAPKISAN for close to 5 years and 7 years, I have been seeing this sector covering almost entire country, close to 3,000 FPOs we have financed. From that experience, I would like to tell the crux of it, what is my experience. First thing is, in the initial phases of 2003 was first FPO. If you remember 2003, when the Producer Companies Act got it, the first FPO is no more in existence today. It's a milk dairy FPO which is no more in existence. Now we are 22 years old as far as FPOs are concerned. We have unofficial figures of 50,000 plus FPOs in the country. But if you look at the initial part of any FPO, it was basically from existing groups, be it a self-help group or a farmers club. That's how the FPO started. The biggest advantage with those FPOs are they had a social cohesion. Like typically FPOs have this internal lending, group meetings and all those. There was some sort of understanding between them. Money was never a attribute for them to be formed. So when they graduated they federated and became a FPO, be it a Trust Act, be it a Society Act, be it of course not much in Trust Act, Societies Act or as a company, they did not have problems to manage even the funds. But when we went on the targeted mode of forming FPOs, we just had numbers. So we said minimum 300 members, you should achieve 500 members in over a period of 3 years. So that's how we all started. So what happens with number game? So people are just taken, यार आप भी member बनाना चाहते हो ले जाओ. So इसमें क्या होता है कि there is always a conflict. Everybody wants, the first problem I would say in most FPOs is every farmer expects some benefit to accrue from the being a member of FPO. मैं 1,000 रुपए दे रहा हूँ, मुझे क्या मिलेगा? तो when this entire FPO started, 2014-15, when we started the produce fund of NABARD, I was a DDM. I was DDM of Madurai district in Tamil Nadu. So I used to go to, we had 12 FPOs newly formed in district. I used to go and tell my people, don't look at 1,000 rupees. That time, when you give 1,000 rupees, SFSC was giving equity grant, which is 1,000 rupees. So, जैसे आपको मतलब 1 साल के अंदर आपका 1,000 दुगना हो जाता है. Correct? And SFSC gives you equity grant. So, you are reaped your benefit. 1,000 rupees आपका आ ही चुका already and you got additional 1,000 rupees. That's the benefit, first thing you get it. And second thing is, when you grow, whatever is going to accrue, it's going to come back to you as dividend. This is first thing they understand. And second thing is, if you take a 500 member group FPO, even a minimum 1 acre land holding of each farmer, you have 500 farmers, 500 acres, any crop you grow, be it a millet or a paddy, the minimum output value would be around 20-25,000 rupees. So 500 farmers, the produce output worth is 1.25 crores. Unlike typical industrial production where we say working capital assessment through NAI committee, which has 20% of turnover should be given as working capital. So for 1.25 crore, 25 lakhs is sufficient. But in agriculture, it will not work because your harvesting is at one go and you will expect marketing to happen at not at one go. So you have to necessarily procure the entire material at one go, then market at different points of time. So that means 1.25 crore is the requirement of working capital to procure that produce. If you even take out 10% of margin money, whatever it is, still 1 crore. See, if an FPO starts as a 1 crore business, where is the money? You asked about nobody is willing to give money, correct? In NAPKISAN, when we initially started, we thought like we will cover because we were also new, correct? When we started the first financing in 2014-15. Of course, 11-12 was the first financing which we did, but officially we picked up in 14-15. Then by about 17-18, we started, we should also encourage new FPOs. So, हमने 5 lakh, जो आप बोल रहे, Samunati started the first one, 5 lakh loan. It's like sort of instant approval they used to give. Then we thought like, we also give that. Instead of first giving 1 crore to one FPO and that agar goes bad, you will have a image that FPOs are going to be failure. Instead, same 1 crore, you can give 20 FPOs, 5 lakh. Agar 5 chale bhi jata hai, still you can manage. So in fact, I was just talking to, there is a napkin stall outside. I was talking to Praveen Meena, who is the current BDM in charge. So I told him, अरे ये 5 लाख वाला मुझे पता है कि जब हमने इंट्रोड्यूस किया था इसी हमारा मकसद यही था to introduce that. Now the typical life cycle of FPO, if you look at, everybody will start with the input. I have time, hopefully.
You have a lot of time.
So I am only testing their time. Sorry. If you start, typically it starts with input supply, because collective aggregation, collective supply. अगर हर एक फार्मर जाके एक बोरी लेगा, और if you take a dealership of IFCO, CRIPCO, whatever fertilizer company, pesticide company, they definitely get a discount. So that discount is passed on to the members. So that is the first input supply, the first service which is provided by any FPO to the members. Once the input is supply, natural outgo is output. So you procure output. Here comes the problem. Now FPO members expect outright purchase to be done by the FPO and entire money to be settled to me. This is not going to happen. If the entire risk is passed on to the FPO, I'll give a classic example. There is one FPO in, it's called Malakkotai FPCL in Trichy district, Tamil Nadu. This FPO purchased paddy at 1100 rupees quintal. I'm telling about 8 years back. 1100 rupees per quintal. They purchased, hoping that it will go to 1400 rupees. They kept on. The price went to 1250, started falling. Because somewhere there was an early paddy and started production, new production has come. When the new thing comes, ideally old paddy is supposed to sell better. Correct? So these fellows did not have enough money even to repay the rent for the paddy storage. So they defaulted because they didn't have money. And I would say even today I tell NPS will happen in FPOs, but most of them are not willful. Because they are all season bound, agriculture season bound. There will be definitely season bound issues. So some crop failure will be there. Sometimes will be excess supply issues. So they are not willful. They will repay, and they repaid after 4 months. So they never defaulted. Okay, this is second. Once you have an input, output may never ever purchase outright 100%. The farmer should also have a skin. 50%. I will give you 50% price right away. 50% you will also get when I sell it, which many farmers will not accept, because if you don't get it, they will take to a trader and they'll sell it. There comes the ownership. People have to tell these members that you are owner of the company, but you are not it's not an agent relationship. You are owner of the company, your company, you have to run it. If that happens in the FPO, nothing like that. I can give you a classic example. There is one FPO in Mayiladuthurai district of Tamil Nadu. It's called Valanadu Sustainable Agriculture Producer Company Limited. It's a 11-year FPO which we have funded 11 times. NAFKISAN has funded 11 times. In one of the years, just after demonetization, they were supposed to default. You know what they did? They borrowed funds from outside at 22% and repaid us. And I was not aware that they repaid us. When I came to know, I called that she's a agriculture graduate, the CEO of the company. I forgot her name, some Sridhar. I don't recollect the first name. I called her, why did you do this? Our objective was that time our interest rate was 8.5%. NAFKISAN was giving a loan at 8.5%. I said, I am giving you 8.5%, not because you should go and borrow at this rate and you have done this. You know what was the answer? Sir, except NAFKISAN, nobody would give me a loan. And I don't want to become a defaulter to NAFKISAN. If I default to you, you will not pay me, you will not give me loan next time. So for that reason, I have borrowed from outside. I am keeping a credit history with NAFKISAN Pakka. This is where this FPO is, even today we are financing. 11 times we have financed this FPO. This is, I would say, definitely a success story. Because the FPO has understood the importance of taking money, doing business and this thing. They have grown steadily. Another FPO, I'll tell you again, my examples could be multiple districts I can tell you. Right from, we are funded in Gujarat, the Jeera FPO here. I think in Banaskantha only. There is... Then we have done from Kali Sindh in Madhya Pradesh. So there I can give you Bhu Amrit in Uttarakhand. These are all classic examples. I would say each one is a class apart. They have got their own, I think Banaskantha was Jeera processing. They had a machinery installed. Kali Sindh was the first one we did for ENWR financing. Yeah. In fact, we have funded Gujarat Federation also. Gujarat FPO Federation also we have funded. In fact, there are 7 federations those point of time. But they had problem with some international buyer on ground it. They had problems.
Just for the crowd, how do you identify a good FPO who's not defaulting willfully and someone who is.
I'll come to the point. I'll just finish off that process value chain. Second, when the output is the second business, which is natural course of business. The third thing would come like this value addition, processing. Because you have now, and I would say in between that, there's some storage and selling. See, output is generally you procure and sell, then you store and sell for a better market. Again, another classic example, Indian Organic FPCL in Alua district of Kerala. They are exporting cocoa and coffee to Germany. There was a flash flood. If you remember, Kerala had a huge flood in 2019, 18 or 19, I don't remember the year, and all the crops went off. They were supposed to default to us. They also did not default. They repaid us. Same reason. I said, nobody was funding us, you were funding me. And even today, they're exporting cocoa and coffee. Beautiful FPOs. What they do is they procure from farmers, store it, wait for prices. Some they export, some they sell locally. So wait for a better price. This is the third process. The fourth comes to processing. You add value, then sell it. The fifth comes export. When you are thorough with all your domestic, you have backup operation. You can't depend, no FPO can depend on exports. The days will change very quickly. Onion you export, suddenly there's an onion, dearth of onion in India, export banned. Agriculture commodities at risk can be never taken by a FPO, definitely. And one biggest lesson which I used to tell to every FPO is, your first 5 to 7 years of your life should never be asset heavy. You be a asset light company. That means don't buy any asset. You should only hire an asset and do. Godown, आपको कुछ सामान रखना है गोडाउन में, हायरिंग पे लो, कभी गोडाउन मत बनाओ. आपको मशीनरी लेना है, वो भी try to take it on lease. Don't do on every outright purchase. One biggest problem I tell you, many state governments and central government schemes have got subsidies. They provide seed processing unit, they provide processing unit, very attractive. Unless your core business is that, and you have backup businesses, never enter into that trap. Because I have come across several FPOs. One example, you have also quoted, Syngenta, you have quoted that. Like, there is another FPO which had a beautiful 1 crore worth seed processing unit in Salem district of Tamil Nadu. Beautiful infrastructure. I have gone to see that and I was stunned. Matlab, top class infrastructure, even you could be getting an export gap certification. That type of infrastructure. What happened was it defaulted. Because the price at which the subsidy was to be given for 60 lakh rupees, and actually the cost was more than 75 lakhs. So whatever margin money they had put. So whatever working capital was there, they have put that also into that. And the infrastructure came up beautifully. They don't have working capital buy dal. This was tur dal processing unit. They didn't have working capital. You have a unit, but you don't have working capital to process it. How will you do it? And the unit which they purchased in subsidy, you know, many subsidies are given to companies within the 4 walls, I can tell you, to companies which has got dubious distinction. Correct? So the machine which had this processing unit, urad dal tha, not tur dal. वो काला जो ना coat, seed coat was still remaining after processing. वो कौन खरीदेगा उसको? So they have to buy a scanner. You have a color scanner which will scan and separate out those color. That will be reprocessed. Reprocessing always involves additional losses, because food processing में losses is more important. So ये ऐसे project है. So this is the normal course of any FPO. इस process को हमें understand करना है. Never ever advise any FPO to go and buy land, buy machinery, buy construct godowns. No, at the initial stages. जितना asset light रहेगा, working capital में काम कराएगा, बहुत बढ़िया चलेगा. When they start earning, and second important point, is their company, they have to realize and they have to continuously pump in equity. If the company grows, along with the equity has to grow. Because ideally, no bank would fund beyond 3:1 or 4:1 ratio. If अगर आपके पास 5 लाख, अगर 500 मेंबर है, हर एक ना 1000 रुपए दिया, 5 लाख का आपका वर्किंग कैपिटल है. अगर उस जमाने का होगा तो 5 लाख SFS दे देता है. SFS used to give up to 15 lakhs. Okay? If you have 1,500 members. So, if you have 15 lakhs, 15 plus 50, 30 lakhs. With 30 lakhs, you will get another 90 lakhs loan at the max. So, 1.2 crore. I told you minimum requirement is 1.25 crore. So, if you want to grow your business beyond that, you need to pump in money. I have classic example of one FPO in Madhya Pradesh. वो 11 साल का FPO है. इसका टोटल अभी भी उसका जो शेयर कैपिटल पर मेंबर इज 190 rupees. 190 rupees. It has got 1,200 members. They will never grow beyond a particular point. So this is one point. Coming to this question of whether they want to how you identify whether they are going to default or not. Look at the business plan. Whenever I tell anybody, see, you are a business entity. You are no more development entity. You, as an FPO, you are a business entity. The first thing is you have to look at a business plan and prepare a contingency plan. अगर मेरा ये business fail होगा, मैं क्या करूँगा? ऐसा नहीं कि आप एक business लेकर जाओगे. No, you have to have a contingency plan. If you are good FPO, you would have all these things in place. First thing is, I got regular meetings, mobilization of share capital is very good. Then I have a good business. I won't say an exceptional business plan. I would have reasonably good business plan with a contingency plan. In case this fails, I would say even a contingency plan A and B. I've seen FPOs. What I'm telling is not theory. This is all my experience of seeing close to 3,000 FPOs. So there is FPOs who are having contingency plan A and B. And they have survived, weathered demonetization. They have survived, they have evolved GST, so many things. All problems, even floods. I told you the example of Indian Organic. They have done it. So this is second thing. Third thing is how they value the relationship with the institution. Be it their input suppliers like Kripco, IFCO, be it outside output procurers like traders or the financing institution. How do they value it? Are they prompt in repayment? Do they repent if they are not able to repay in time? अरे यार मेरा लोन खराब हो रहा है, वो बहुत लोग ये करते हैं मेरा भी वेवर हो जाएगा. This is the first attitude you will make out. And आपको interaction पता चल जाएगा. So every FPO when we sanction, no, I call for the signing of documentation. I call all the board members to my office. वो ट्रैवल करके आते हैं मेरे पास, तो आधा घंटा में बात करता हूँ उनसे. तो उन बोर्ड मेंबर के बातों से पता चल जाता है ये कैसे FPO है, उनकी कितनी अंडरस्टैंडिंग है सब्जेक्ट में. और आई हैव सीन क्लासिकल FPOs, people who have not read beyond 10th standard, having so much of understanding. And another important feature for a successful FPO, division of labor. One CEO, one chairman of so-called chairman of an FPO cannot do anything. NABARD office is here. We have so many people here. One CGM cannot do anything. It is a collective team effort. What you have seen today in this premise is not a one-man show, correct? It is a team of people who have worked towards and done it. Similarly, in FPO also, there should be at least a board of directors of 5-6 people. Somebody says, I am good in talking. Okay, let me do the marketing part. I am good in accounts. Let me take the accounts, finance. So like that you divide the labor. I am good at convincing people. Let me do a collective collection of members for the groups. And I will also help in collection of dues. So this is how the division of labor helps. And there are classic examples of this again. And one important thing is, I've seen this in Karnataka. Karnataka, many FPOs, they start doing internal financing. Most deadliest business which an FPO should do. Internal financing, any FPO is valued by the turnover. Turnover is sales turnover, right? So if you have internal business, lending you're doing, suppose you have got 15 lakh rupees and you are charging 10% interest, how much you will get? 15,000 rupees? Sorry, how much? 1.5 lakh? 15,000, correct. 15,000 rupees, you will get as 1%. So 1.5 lakhs is the interest income, correct? Most people, what they do is they do dairy financing, animal financing. अगर एक गाय मर गया ना, 50,000 गया, तो आप 1.5 लाख कमाओगे, 3 गाय के बराबर है वो. अगर 3 गाय मर गया, आपको पैसा नहीं आया, तो आपको पूरे बिजनेस जीरो पे आ जाएगा. So because whatever you do, 15 lakh is not turnover, 1.5 lakh is a turnover. Correct? So never ever encourage a FPO to do internal lending business. I will stop here.
So I think it was. I know a lot of more people have questions and contributions. I think this was very insightful. So spoke of multiple things on how do you create a cohesive unit within a team within the FPO to drive financing, how it's done. Sir was also leading NAB Kisan. So please reach out to Sir if you have any other questions. I've been told by the organizers that we are out of time, I think 2-3 times. So I would, no. I think that was very insightful. So I will excuse all the other questions that you have. all the panelists as well as other members of the audience, would be good if we could, stay here for the next 5-10 minutes. Anyone who wants to interact with the panelists, happy to do so. Thanks for organizing this panel, and thanks for the discussion. Firstly, a big thanks to the audience. I think the kind of participation that we saw, obviously the topic is something that's close to everyone, but the kind of participation that we saw, I think really appreciated. Thank you.